Part 2 of the weekly stock market update. The most important thing you're going to watch on social media all week. Okay, get a notepad and pen and start taking notes. S&P 500, you can see the gradient of the momentum up there. I'm very happy with it. As I mentioned in part 1, watch out for drawdown depth and duration to recovery. That's incredibly important. I get that from, well, when we first set up the hedge fund in 2004, we realized in our newsletters that's the thing we were asked about when we were pitching for capital. Okay, so make sure you know in an upward trend that's what happens. Also, if ever you buy an index tracker or any other security, assume that the worst drawdown is going to happen the day you buy, and the duration is going to be as worst as it's been in any upward trend since in the last couple of years. Okay, as soon as you buy. Why? Call it Sod's Law. Nasdaq, well, got room, so I'm happy to be long this index. How much you'll know from my Great Investments program. That's the weekly momentum, that's the monthly momentum. All looks still set. Now, will there be pullbacks? Yes. That's a drawdown duration and depth. How do you know if it's a baby bear, which is one you can ignore? Well, the monthly MACD will be rising. How do you know if it's a mama bear like that, which is one you might want to take some profit because it might transition into daddy bear? Well, that's if the monthly MACD starts falling but hasn't crossed its own moving average. And how do you know if it's a daddy bear, which means get the hell out of the asset class? Daddy bear's about to burp and burn down the whole house. Well, the moving average, the MACD moves below its moving average. And in case you're wondering what this MACD thing is, it's just a comparison of the short and longer term average prices of the security. It tends to be not a guaranteed way of forecasting prices, but out of the 18 books that I've published, some of which have become international bestsellers for the Financial Times, it's a pretty bloody good measurement. It's been around for about 50 years as of high. FTSE 100, okay, it's dropped a bit there. It's a baby bear. Any falls are a baby bear. What's a baby bear? You can ignore it because the monthly momentum is still going strong. Okay, so now you know when to ignore price falls. If it's a baby bear, mama bear, you might take some money off the table. Daddy bear, don't ignore it. Go into cash. S&P 500, these are the ones which in the past month have done the best. Doesn't mean you go out and buy them, just giving you the information of these. And as I've done in previous weeks, I've explained why I wouldn't be owning this. What I've done with my NVIDIA holding, you will know we bought in January 2023. You'll also know if you're on my program what we did in April. And if you're on the program, you'll know what we've just done. There's a chart for you to examine. If you've been following me long enough, you'll know what I've done. Broadcom is one which our AI systems picked in May of last year. And it's been 12 months, of course, now because we're into June. And you might ask, well, how come you guys didn't pick it up? We used AI, we'd uploaded all the data, and it was one which had come up on our list, but with quite a few stocks come up on our list. When the AI stuff overlapped with our list, we thought, right. And so it's been fantastic. Thank you. It's therefore not one you would exit yet because the exit rules aren't hit. What's the exit rules? Well, it can be if it drops X%, sell Y. What's X? Say 25%. What's Y? 100%. Okay, if it drops X, sell Y can be one exit rule. And it hasn't done that. It's not even got close to it. Insula was one of those big risers, as you can see, and you'll know why I wouldn't buy that despite it being a major big riser. By the way, on a recent uptrend, look at that drawdown. Ugh, right? Trust me, you think you can take a 33% drawdown? You can't. You will panic. You will absolutely need a new pair of trousers within minutes of that dropping even 10% in a week. Okay, so this one's not for you. Trust me on that one. Hewlett-Packard Enterprises done well recently. Look at that. Probably the news is rather good. See that 26% drop on a general upward trend? You can't take this volatility. Leave it. It's not for you. You know, you're the person who's going to go for the sick bag on a flight when somebody just got up to go to the loo and it wasn't even turbulence. That's not for you. Stay clear. Don't even do it. Same with HP. It's not for you. Look at that. 23% over 1, 2, 3, 4, 5, 6 weeks. 7, 8, 9, 10 weeks. It drops even more. Not only that, some weeks it was dropping quite a bit, like 4-5%. It's not for you. You can't do this unless you've got travel sickness pills. You can't swallow enough of those. Stay away. Okay, Deckers, a bit smoother, 41%. Well, that wasn't really an upward trend by then, because that's the upward trend. So you could say, well, we're not going to count downward trends. Fine. Okay, but honestly, you don't want any piece of this because the value growth income isn't there. It's overbought. You don't want it. Stay clear. What about Oracle? Well, Oracle, as you know, was one of our selections previously. And whilst that's a downward trend, so you can ignore that drop, okay, that is upward, tends to be relatively smooth. You know what? You get 3-4 months of it going sideways and not giving you any return. You don't want that piece of that. Presently, anyway, it doesn't hit value growth income in any event, so you don't need to even worry about buying it. Okay? Teradyne, well, would I buy it today, even though it's one of our historic holds? No, I wouldn't buy it today. Why wouldn't I buy it today? Well, it doesn't hit our value growth income. For those on the program who still own it, they know what to do. Those who aren't on the program and never got into it, therefore, sorry, you missed the bus on that one, and the boat, and the aeroplane. So there you go. Qualcomm, again, previous one from the program. Those not on the program, okay, you missed it. Would I buy it today? No, a bit overbought. Sorry, we continue holding it though, because unless it drops X, we won't sell Y. Same goes with Costco. Wouldn't buy it today. Value growth income, momentum overbought. But for those already holding it, if it drops X, you'd sell Y, and X might be 25% and Y might be 100%. Related to that, Apple, you'll know that we had that in January 2023 in double leverage, but this is not January 2023, is it, Alpesh? No, it's June 2024. And what we've just done, well, I'm keeping that confidential to my Great Investments program, but here's the chart. You've got all this information for free, okay? Same with Amazon. You've got all the charts, you've got all the data and the information for free. Okay, so you can see what's on there. Same with Microsoft. You've got all of that for free for now. Those who are on the program, you don't need to watch the public broadcast. You watch the private one, because you know in my 40-minute Wednesday and Friday broadcasts, I've explained in detail my positioning on Microsoft. Same with Meta, okay? Same with Meta. More to come. Don't forget YouTube channels over there. So let's go Bank of America. These cheap financials, you know, which is sort of at record low prices, as you can see, with some momentum. The problem is not interested because they don't tick the value growth income box. Because should they fall, as Piper Sandler think, then I'll be thinking, oh, damn, I know it was cheap. I know there was momentum, but it didn't have enough growth and income. Why did I break my rules? And yes, I know its drawdown danger depth is only 11%. Duration is probably a couple of months. Not bad. Ticks all those boxes. Actually, it's probably that period which is more appropriate. We have a data and a graphics team. The graphics team aren't necessarily experts, so they should have covered that one as peak to trough, but they covered that. Netflix, I've been covering every single week since this period. It's not one I own, as you know, and I've been saying, well, you know what I've been saying. If it's like this, I've been saying it's overbought and I wouldn't buy it today, even though those figures hit. So now you know I wouldn't buy it today. Well, I didn't buy it here either, despite it rising that much. Of course, in hindsight, I wish I bought everything which goes up. Walmart does tick our value growth income boxes, but no, you can't have it because the momentum's too high. It's not for you. Okay, here's another reason why it might not be for you. On those upward trends, see how it drops there and then drops some more, drops there, drops there. Think of this like a plane ride. My son hates flying. And let's say it just suddenly went boom, or then it climbed up again, then boom, then climbed up again, then boom, and then climbed up again. If you're going to need the sick bag, just, it's not for you. Stay clear. It's one way to stay clear of stocks. You are not suddenly going to grow a pair of courageous ovaries. It's just not going to happen. All right. Tesla, where are we on that one? Well, it's not. It was been previously a special situation. We got in January of last year, and then we got out in October of last year. It had a nice gain. It then fell off. It's not a special situation again. We'll worry about it when we need to worry about it, but it's certainly not not at the moment. Why? It's not a special situation. Well, first of all, the MACD is falling and there isn't a value growth income of 7, 8 or 9. So simple as that. So not yet. No need to be impatient and think, oh no, what if Elon stops me from buying the stock in the future? Take your time. Be like Warren. Just laid back and calm. The guy is 152 years old and he behaves as if he's going to live forever. You got to be the same. Just do what he does. Diet Coke in the morning, a Big Mac, and yoga and meditation. In fact, get rid of the Big Mac and the Diet Coke, just do the yoga and meditation. Okay? So relax. Don't be jumping around with FOMO. Berkshire Hathaway, speaking of the big man, overbought. Sorry, Warren. No. Now, Eli Lilly. Well, you'll know my views on Eli Lilly. I've discussed them in the private Great Investments program, but you can see the momentum there, and you can see it's missing a value growth income. So, despite what they all say, you know my views. Walt Disney, it's a baby bear. Why? The monthly MACD is rising, so that part we can ignore. There we go, there we go, there we go.